The numbers are down and the data is revealing a terrible future that we all need to get ready for and prepared as this reverse housing market crash lays waste to the U.S. real estate market. Prepare yourself for unsettling news, everyone, because the housing market in the United States is plunging into dire straits. Would you look at that? All these homes are going up for sale and they can't even get a buyer if their life depended on it. And this weekend is going to be slammed with open houses. This is insane. And this isn't even all of them. Heck, there have to be at least 20 or more open houses this weekend. And this is only for an 11 square mile area. And most of that is protected land that no one can build on. Man, I tell you what, these folks with these 700,000, 800K, 900, and definitely the $1 million or more listings are in for a world of hurt. This is absolutely insane. The once promising landscape has been tainted by a storm of change and is brewing into a perfect tempest of financial turbulence. So brace yourself for what's coming as the impending reversal of fortune is sending shockwaves through the very foundation of this housing market. As has been reported by many other YouTubers before me, economists, analysts, and real estate professionals too. Gone are the days of favorable mortgage rates that allow dreams of homeownership to flourish. With today, the 30-year fixed mortgage rates, a symbol of stability for decades, having spiraled to heights not witnessed in over 2 decades. I mean, it's as if a hurricane-like gust of wind has swept through, carrying these rates to a chilling pinnacle last seen back in 2000. A time before former First Lady named tropical storms and direct energy weapons started fires to destroy indigenous people's land. And what was once affordable has now become a luxurious extravagance, an unattainable jewel in the crown of the few. Housing and the lack of affordability has reached a new level and is slowly slipping out of the reach and grasp of most Americans. Imagine planning your budget around a monthly housing payment that suddenly swells by over $1,000. And that doesn't even include the crazy insurance policy premium rates either. And when you get that quote, you're definitely going to want to be making sure you're sitting down for it. And a home that you could have comfortably afforded just 2 years ago is now more like a dream or a fairy tale and is so out of reach, it's not even funny. The winds of change have brought a relentless surge in mortgage rates, pushing your buying power to its limits, wrecking budgets and forcing many to live at home with parents, shared spaces, and rent with friends or strangers, or take a more minimalistic approach and sell everything to live out of their car, van, or truck full time. Hashtag full-time van life. The bad news? The comforts of the American dream, which seem within reach, are fading into obscurity. But the impact doesn't stop there. It's not just about the dollars added to your monthly bill. This storm has eroded your purchasing power by nearly half, casting a shadow over your financial horizon. And the storm's power has stripped you of your ability to make choices freely, caging you within the confines of fiscal restraint and likely disregarding the very thought or idea of retirement and settling into the grim reality that you will more than likely work the rest of your life until you die. Dreams of spacious homes with white picket fences, a wife, 2.5 kids, and a dog while living in comfortable neighborhoods with sidewalks and weekend block parties have been replaced by the cold, hard reality of rising interest rates, impossible mortgages, and the whole homeowner's insurance policy premium and cancellation or non-renewal nightmare. And as you ponder these changes, remember that every increase in your housing payment is a surge of profit for lenders and the Fed, depending, but most mortgages are ultimately sold to and bought by Sallie Mae, Freddie, or Fannie Mac, the VA, USDA, or other government entities sinking their teeth into home ownership and leveraged debt. And just so that we can all understand what I have to share with you next, a quick history lesson about Fannie Mae and Freddie Mac and how they were established by Congress to play a crucial role in the U.S. housing finance system, aiming to provide stability, liquidity, and affordability to the mortgage market. The government's goal in achieving this and getting their piece was by purchasing mortgages from lenders, holding them in their portfolios, or building them into mortgage-backed securities for sale, or MBSs. This process provides funds to lenders for further lending and maintains a stable supply of mortgage money for homebuyers and investors in multifamily properties. And by guaranteeing the payment of principal and interest on the underlying mortgage in MBS, these entities were then able to attract more investors to the secondary mortgage market, thus increasing available housing funds and having an impact on interest rates for borrowers. But during financial turmoil, Fannie Mae and Freddie Mac also helped stabilize mortgage markets and take control of the housing sector. Originally chartered in 1938 and 1970 respectively, they are now shareholder-owned companies operating under congressional charters. And the Federal Reserve started an initiative that involves reducing its holdings of mortgage-backed securities, a move that could have significant effects on the economy. So in response to the 2008 financial crisis, the Fed purchased a substantial amount of debt securities, including mortgage-related securities, to stabilize the mortgage market and inject money into the economy. And over time, the Fed continued to add to its balance sheet by purchasing these securities. But in recent years, the Fed has allowed some of these securities to expire without replacement. And the current decision to further reduce its holdings of mortgage-backed securities reflects the Fed's efforts to normalize its balance sheet and potentially mitigate inflationary pressures. The move also raises questions about the potential impact on the housing market and overall economic demand, as the reduction in mortgage bond holdings could lead to less capital circulating in the economy and thus slowing down demand. And slowed demand, softened economy, shrinking balance sheets, these starting to ring a bell, folks? Multiple millions of jobs lost and a rise in interest rates with several months of meetings held in Jackson Hole by the Fed and other officials to jack up interest rates higher and higher and higher. The same interest you're bound to pay over a 30-year mortgage, or now 40-year mortgage in some cases, has inflated from a moderate stream to what seems like it can only be equated and synonymous to a raging river. Mortgage rates are approaching 8%, and that is only if you have excellent and impeccable credit. None of that 650 nonsense over here, folks. The underwriters will laugh, and the mortgage brokers will have a field day with the amount of points that they take on and commission that they stand to make on these higher risk, typically low-income applicants and possible borrowers. Only after being put through the ringer during the whole process and sitting through closings as they sign their life away on a monstrous debt that they have no conceivable way of ever really paying for. And God forbid there's a financial hiccup, an unexpected emergency, expense, or worse, job loss, termination, or layoff. Now, unemployment and sky-high mortgage payments, folks, no, those two do not mix. It's like oil and water. So it just doesn't seem really good, folks, and it's only projected to get worse. And that's depending on who you ask, what channels you watch, and your particular circumstances, mindset, and beliefs, as well as your own personal financial situation, net worth, income, debt-to-income ratio, savings, other investments, and long-term strategy when it comes to home ownership and real estate. And don't get me started on buying gold. However, I was talking to a friend yesterday, and they told me that they needed to buy at least $1 million worth of real estate before the end of the year in order to avoid paying hefty taxes on their income. And they do not want to do that. Their focus is on short-term rentals and properties that are in need of minor renovation, something in the 50 to 100K range, and just continuing to add to their real estate portfolio and getting more heads in the beds. But whether or not if you are a first-time home buyer, or this is not your first rodeo, or perhaps you're looking to purchase a vacation property or get further diversified and produce passive income through an investment property, the price you pay to own a piece of the American dream has skyrocketed. And the wealth you thought you were building might be draining away into the abyss of interest payments if you don't know what you're doing and how to navigate these turbulent and unforgiving waters. And yes, some of you will say that the banks, they want to see you fail and are hoping you don't succeed so they can then claim the property for themselves after a nasty credit score destroying foreclosure and eviction, likely sending you into Chapter 11 or Chapter 13 bankruptcy courtroom proceedings just to escape the black eye and sit on the sidelines and wait. What would seem like an eternity of about 7 years just to get back to ground zero and on the path to rebuilding your credit. Likely at that time to be more of a social credit score opposed to anything else, but time will tell. And I don't want to compound this alarming situation, but the truth is that the fabric of the housing market itself is unraveling, or at least that's what I've been told and I'm seeing plastered all over the news and on YouTube video titles and thumbnails. But to be honest, the telltale signs of decline are evident in the reduction of home showings, depending on your particular hyperlocal market. Prospective buyers are retreating, like the Hawaiians seeking shelter and refuge from fire-breathing hurricanes and direct energy weapons sparking fires on the chain of islands. Unfortunately, without a warning siren sounded to be heard and prepare the victims for the damage that is likely to be done. I'll tell you what, guys, that Lahaina massacre is truly a sad situation. And what makes it worse is how the people are being treated and lied to even to this day. After they have all been through so much and have lost literally everything and the people they love and the place they have all called home for years. And nationally, the numbers reveal a sobering truth. The overall interest in buying homes has plummeted, echoing the dark days of the past, all by comparison and based on the numbers, depending again on your hyper-local market. And yet, even amid this chaos, there's still a glimmer of hope. Despite the problems shaking up in the housing market and turning it upside down as we are entering in what is being described by experts, analysts, and real estate professionals as a reverse housing market crash, this may be the wake-up call we needed to reimagine the future. And although the path to homeownership might be shrouded in uncertainty, the journey is certainly far from over. So as we brace for the impact of the housing market crash, let us not forget that resilience is the cornerstone of the American spirit. And in the face of adversity, innovation and determination will light the way forward. Now, I do have an upcoming video plan with a local real estate professional to provide their real-world boots on the ground take on this current situation, what is happening, and more importantly, likely to happen next, and the essentials, steps that we can take of how we can all get ready and be prepared. So if that type of video interests you, then please hit the like button and drop a comment. Just either leave a number 1 in the comments and say, yes, Kevin, please make that video. And don't forget to subscribe if you haven't already, and share this video with everyone you know. Also, be sure to watch the next video coming up because it's going to be loaded with important and valuable information that you're not going to want to miss. Now, I'm going to go ahead and head inside because it's time for me to connect with a new client. And I just wanted to bring you this important update as quickly as possible. To all of you, I wish you well. Stay safe. And most importantly, continue to be informed and seek the truth, just like you have and you have found here with facts and supporting evidence. Until next time, I hope you all have a great, fantastic, and an amazing day.